Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Have you noticed on YouTube that the subscribe button is now black? It's been red for 16 or more years and is now black. So scroll down, find that black subscribe button, and click it. And welcome to today's episode of the Passive Income Podcast. Dan Wedge, you can find him on Twitter. I believe it's at Wedge Social, correct? And I'm going to
Yeah,
throw it over to you to give yourself an introduction.
for sure. Yeah, I'm Dan Wedge. You can find me pretty much only on Twitter. I'm at Wedge Social. But I've been kind of investing for over 16 years. My dad got me into it. He even bought stocks in my name when I was 16 years old, still in high school. It was kind of a cool thing that I didn't understand it all about, and he kind of gave me the ropes. And that was a lot of fun until about 08 and 09 when I found out what a downturn in the market or a correction was. And at that point, I went from black to red in about 6 months. That was a very interesting learning experience for me because at that point, much like the 2020s into the beginning of this year, was a very upswing kind of feeling, and it was interesting. So I did that, learned a lot, and actually took about almost 10 years off out of it. At this point, I've got a family and kids, so a lot of my investing at this point is kind of set and forget and not do a lot with it. But I discovered dividends way back. I was trying to find tickers to look up when I was in high school, and Badger daylighting came up, and they were a dividend stock, and this cool thing that I bought it, and I could wait for the stock to go up and still get paid monthly in it, and then reinvest it. It was a great thing.
It's a great feeling, isn't it? Especially when you discover that, you're like, oh, they're going to pay me to not work for them. This is incredible.
Yeah, it was fantastic. It was like, here, it's not only an investment, but you're going to kind of earn interest on it on a semi-compounding, and you can just kind of toss it in.
Yeah.
So that was really exciting. And with Badger, I was I was out in Alberta, born and raised in Calgary.
Yep.
So I knew a lot of the oil kind of industry, and knew that there's freeze up in the fall, and there's thaw in the spring, and there's these kind of downtimes where anything related to oil and gas kind of slows down. And it was kind of a nice pickup that I would be kind of trading every 6 months, but also getting a dividend, and then knowing that dividend day was coming up and watching the price kind of creep up a little bit. I could sometimes either wait for the dividend and wait another month out, or sometimes I would kind of sell into it to kind of take my profits before it was dividend. So it was kind of an interesting way to get into it. And then I don't know how long you've been into dividends, Dave, but I remember when dividends were tax-free in Canada, back before the TFSA. So that's really when I kind of got into it. And I remember that being the policy trade and going, oh man, like this great free money, this interest I was making on all my stocks, now I have to pay taxes on it. So I kind of migrated a little bit over into the TFSA. But yeah, that's kind of where I'm at. And then in 2020, I kind of got a whiff of all of that meme stock stuff, and I got to see what this is all about. And I got some time on my hands now. I'm at home for 2 months through COVID. So I started getting into it, and then it's been an interesting journey for where I'm at now. And I'm starting to understand a little bit more back to my understanding of 10 years ago. So that's kind of where I'm at and where I'm
Nice.
from.
Yeah, a couple of things there. That 2008, you said 6 months, but it probably felt like 6 seconds where you went from in profit to not so much.
Oh, it was a blink of the eye. It was like, I'm going into, I got a little nest egg for university. I'll be, this is great. I'll be able to buy my first house. And then it was, I'm young enough to make it back. And that was, that was the, okay. Because, my going in, my dad was like, he taught me how to leverage right off the hop. I took my student line of credit, and that's what I started investing with, which
Nice.
I wouldn't recommend anymore.
No.
But at the time, I was like, "Oh, hey, this is a nice rate. I can kind of do it." And I was really happy that I was like, by the time I got to 22, 23, I'd kind of paid back the mistake and was kind of going in a positive direction. But
we learn from our mistakes, right?
Yeah, and so I learned a lot during that down that market correction, and where it kind of went. So I do a lot more. Like I said, I've got a young family now. I'm investing for them.
Yep.
And so I really make sure that
That's
it's
great. That's
kind of,
generational, maybe not I'm not saying it's generational wealth, but generational knowledge. Like, shout out to your dad because
yeah,
as we know, this isn't taught in schools, and I don't know the number, but like 80, 90, 85% of parents don't have the financial literacy to teach their children. Your dad did to get you involved in it, and now you're passing that along to your children as well. That's absolutely incredible.
yeah. It's I mean, my daughter's now 6, and we're just starting with money, and I'm trying to, like, I want to see, like, she bought a little 2-cent toy the other day, and she brought it home. She's like, "This isn't really what I wanted to spend my money on." I was like, "Yep, you feel that," and so
That's
it's
called
just
buyer's remorse.
yeah, it's the ability to kind of go, okay, yeah, I got to figure this out, and I can't. Maybe I don't jump on every item at the checkout. So,
Right. Yeah,
but
those impulse buys kill you, right?
oh yeah, it's the hardest thing, and it's something we really, my wife and I are really aimed at making sure that where there's no unnecessary spending on a daily basis kind of thing. So, yeah, it's cool to start thinking about that in the last couple of years. Go, okay, um, it's not my assets anymore. It's going to be my kids, and hopefully they'll take care of me with them as I get older. But I better
Right.
start planning for them, and so it's kind of interesting to see it that way.
Yeah, great. No, that's awesome. I guess usually I kind of just start going over some of the different market sectors
Yeah.
and different companies in those sectors with a lot of the guests. You've probably seen some of the past podcasts or listened to them. And so just off the top or off the hop, anything that you really love investing in? Obviously you mentioned like discovering dividends, and so is there a sector like REITs or you mentioned oil and gas as well. So is energy
Yeah.
sort of high on your list? And
It was. I actually, as of right now, I have about if you can believe it, about 25% cash position that I'm just sitting on and have been sitting on for, yeah, it's grown over the last 9-10 months here since the beginning of the year. I'm very bearish in the markets right now. I'm not. I don't see a lot of opportunities. I'm kind of still waiting for. I think that, like, even right now, I see this little blip up, and I can't see it carrying us through into January. So I'm going to full warn there. I'm not going to be very excited about a lot of stuff right now.
yeah,
I'm kind of just waiting and not necessarily timing the market, but just getting ready with the next tranches to start kind of coming back in and enter back in. So for myself, I have RESPs, sorry, RRSPs, which is the Registered Retirement Savings Plans, which I've started to contribute it into, but I've really focused on my TFSA, the tax-free savings, just getting that in every year. And then by far, because I said I had kids, the registered retirement or the registered education plans,
yeah.
best investment I can make out of anything in the market.
Oh yeah, because
I
you're
put,
taking as a parent, your number one thing you want to do is take care of your kids, right? So
yeah,
so that education plan, the RESP is, I'm sure, high,
well,
obviously high on your list, top priority, right?
yeah, and it's a 20% match by the government as soon as I toss money in. So it's before I even do anything with it, I'm
Every time
already,
you put $100 in, they put $20 in, and you're like, "Thank you very much,
yeah.
Mr. Prime Minister, whoever the prime minister is of the day," right?
Yeah. So it's that's the number one thing, and then yeah, just trying to keep up. My TFSA is almost getting close to that max, which is kind of nice. But yeah,
Kind of nice, but kind of not, because you're like, "Oh, now I'm gonna have to pay tax on things."
yeah, it's kind of like, where do I go from here? Where do I start? And I
Yeah,
don't know, my investment guy said, oh no, kids can't get the TFSAs until they're 18 yet. And I'm going, all right, well there goes that plan. So
yeah.
that's kind of we go. But I would say that the only thing I'm still favorable with is actually an ETF dividend fund. It's on the Canadian market, XIO, and it's a managed fund. It pays me a little bit of a dividend,
Mhm.
or let me make sure that I got that symbol right. Yeah, XIC. Sorry.
XIC.
Yeah,
Oh, yeah, I have heard of that one.
I shares.
I haven't looked into it too deeply, but yeah, it's definitely one I've, looked at in the past, but I don't think it's even on my watch list right now, which is crazy because my watch list is probably 80 or 100 companies on it in
Yeah,
different ticker symbols, right?
yeah. I've seen that you go a lot into the different regions and sectors, and it's. Um, I just don't have time to get as much in depth at the moment. So
Yeah.
I'm trying to get there and I try and pick out, but yeah, that one's just been a slow investment for me. And what I'm hoping is that moving forward the next year or so, that the Canadian economy won't have that massive slowdown and kind of bring me down. But the dividends, again, it reinvests.
Right.
I reinvest every single one of my dividends,
Yeah.
because I believe in what I invest in, and so why wouldn't I want more of what I already believe in? So that's really why another reason why I see the dividends. It's kind of a, oh hey, look at, I've got a bigger position now and it's paying me a little
Yeah.
extra. So that's just magical, I find, and I don't have to necessarily worry about how much it is, but just that it's slowly creeping up.
Yeah, and ETFs are great for that, right? It's, like
Mhm.
you said, if you don't have a lot of time to do a lot of research, basically so many of these ETFs have done the research for you, and you still want to look into them a little bit or somewhat to make yourself comfortable, do your own research, do your own due
Yeah,
diligence and whatnot. But at the end of the day, there's so many ETFs where you don't have to. I think you said earlier, or maybe before we started recording, sort of set it and forget it, right? Like it's just that's
yeah.
it.
I don't have to like. I don't know. I was listening to some the FinTwit guys on Twitter on a space saying, one of the guys, he goes, you need to be starting to think like a 25-year-old always. And I kind of got up and I asked him about that, and he basically said like, you're not planning for that retirement necessarily, where you're going to have to start withdrawing, but you just want to keep on getting that healthy mix of risk and keep on growing. And like I look at my portfolio as a risk, and so like, I got
Mhm.
like a 5% high risk. It's going to be something that if I need to know I'm going to lose it, and if it doubles or does whatever it's going to do, great. And then take another. It's not quite a 60-40 split. I probably more of like I think I'm at about a 50%. I mean, my cash position is just throwing me off right now, but about
Yeah.
a 50% into equity dividend funds right now. And then a couple extra things here and there. But yeah, I've got such a high cash position. I've kind of liquidated a lot of where I'd like to be, but kind of waiting to get back in the market.
Risk
Um,
and reward, right? Risk and reward. I
yeah,
do want to
exactly.
ask you about the cash position though. Like all of this year, or I guess early in 2022, the market was still rather high, and
Mhm.
then it started to drop somewhere around June, July into the summer.
Yeah.
And I've taken that opportunity to dollar cost average down on so many of my different holdings.
Yeah.
And so it's like I'm thinking, like, isn't everything on hasn't everything been on sale? Like Black Friday sales, Cyber Monday
Oh,
sales for the last 6 months.
yeah, it's been amazing. And then it's kind of funny because a lot of the stuff I am watching, and it, it's I buy a little, I kind of dollar cost down, and then I go, oh, what, if I just waited another month, it would have been a little bit more. But yeah, I'm starting to see, I'm going to be I'm going to be in the market for a long time. So
Right.
if it's going to pay me down the road, then it's not. I don't have to worry about trying to pull this money out in 5 years to go buy a car
And
or
that's
something
where I
like that.
am with the dollar cost averaging. I'm not trying to time the market. I'm just trying to spend time in the market.
Mhm.
And I don't care if I buy it at $10, $11, $9. Hopefully in 10, 15, 20 years, it'll be a $20 stock or whatever that has
Yeah,
paid me dividends that entire time. And I'm obviously just using those random numbers, right? Like,
yeah, and that's the hope about it, is that you're able to get these dividends, and then you go, oh great. At one point, really early, I haven't had a chance to set it up yet because I've kind of still getting back in the last 2 years, but I would take my cash, but my initial investment, and go, okay, you know what? I'm going to take my profits, but I'm going to leave everything the dividends did. So sometimes it's 5%, sometimes it's less than that, but then
mhm,
it's just there, and then I can. It's a really nice way to go. Hey, what am I? Well, oh, hey, look, this thing's gone way back down here. I can go over and pick this up or buy this one. So that's really kind of my strategy on it. And
that's
but
an
yeah, it's
interesting strategy if you're selling something off, but keep the amount of dividends that's paid you over whether it's a year, 2 years, 10 years, whatever, however long the length of time you've held the position, right?
Yeah, because I mean, I think at that point I'm going, okay, I'm taking I feel like the valuation on the stock is at a point where it's getting a little frothy. I can take my investment out and still have, skin in the game, but not like the risk is no longer there because now it's just my dividends. And if it drops in half, it's, hopefully that's not dropping in half because of, the cash flow issue. Um, but it's allowed me to kind of say, okay, hey, look, now I can come back, like, you said you got like 100 different companies you're watching. I can just kind of go, oh, hey, look, my initial investment here is kind of, it's kind of come back down. I can jump back in now if I want, start considering it again.
So at that
So
point, do you feel like you're playing with house money? Like they've paid you enough that okay, I'm playing with house money now. Is their money? Like
yeah, it can just sit there for the rest, like, it can just sit there and slowly collect dividends, and I don't have to ever worry about it. And then it's kind of oh, hey, my house money's down a little bit, maybe, and that's where my cash position would come in, and I can go, let's reinvest. Let's I have strong feelings about the overall growth of the company and where they're
yeah,
going. And so that's kind of where I see it. Like I kind of checked into Badger there the other day, and it's their dividend has gone from monthly to quarterly, and they had a restructuring there, so it's not paying me as much. And they had they've had, it's been 10 years of kind of watching it back and forth, so it's technically
yeah.
a loss, but I have that kind of tie in to come back and go, oh yeah, right. I've got this investment with the company, and kind of jump in. So, but yeah, I wouldn't necessarily recommend anything I talk about here is even close to financial. I'm just
This is
a,
not financial advice. We're
I am
two
just a
guys
guy.
talking, right? Mhm.
Yeah. So,
Correct me if I haven't looked at Badger in a really long time.
mhm.
Correct me if I'm wrong. They are a like a vac truck company,
Yeah, they're kind of like and the reason why I kind of like them is they're secondary to like the oil industry in Alberta, et cetera. So they'll go in there and they'll just cut down. So if you got to find, like, they do a lot with cities and stuff too. Like if hey, we want to put a new sewer line in here, but there's power lines, they'll come in and they just cut the dirt out with water, suck it out, and so
right?
it's kind of like a shoveless dig.
I should say vac truck means vacuum truck, so they're literally just sucking out whatever out of the earth that you need sucked out of it.
Yeah, and I don't find that there's a lot of players that are on the public market for it. There's a couple that are private that are larger, but Badger is one of the larger ones. I know they've got one other competition. I can't remember the names of them right now, but they are expanding. I was very impressed with how much they've expanded in the States. But again, I find they're very oil related. So with the lack of investment the last bit, and when the shale kind of
Right.
went down, I just haven't seen them kind of bounce back from that yet. But um, I don't know.
So I have
It's
to ask,
yeah.
with your background in oil and gas and growing up and living in Alberta and what's gone on recently with Algonquin Power, AQN, what are your thoughts there?
I'm not familiar with the Algonquin Power
Oh,
situation.
okay. Well,
Sorry.
never mind
Um,
then.
yeah, the other thing is I'm in Windsor now in Ontario, so I'm more tied. I really try and talk to people. I try and get the ground on and see what I can see. So I'm slowly getting more and more into the supply chains of auto industry and seeing that a little bit more. But
Right.
um, yeah, I know that there's still a lot of development happening in Alberta. It's just a matter of trying to get it going. So yeah, that's kind of my take on it. I don't know if that's exactly where you
Yeah,
want to
well,
go, but
basically AQN is just another energy sector player, and
mhm.
they've just kind of had a little bit of a massive hit recently, so we can move on from that topic.
Yeah, yeah. I don't know. I think like again, I'm going back on my learning, but I foresee that the oil and gas industry is going to kind of come of an abrupt stop briefly as we get to the tail end of this, as just demand falls through. I don't know. Um, yeah, that's
Yeah, I've had so many guests on now that are like kind of the extremes on the oil and gas, like either like, hey, listen, we still need it, it's not going away anytime soon. And
mhm.
others who have been like, well, we don't know where it's going to be in 20, 30, 40 years, right? Like, are we transitioning to wind, solar, and geothermal or whatever other types of energy there might be
Yeah,
that aren't fossil fuels? And yeah, it's literally been the full spectrum from one end to the other of we still need it to we're not going to need it much longer, and nobody really knows, right?
Yeah. The owner of one of the dealerships I was talking to, he says, at the end of the steel era, there was a lot of steel. At the end of the copper era, a lot of copper. At the end of the oil era, there'll be a lot of oil. And
Right.
so I think that moving forward, we're going to need it, and there'll still be development. It's just the housing wares, like there's no refineries being built. Like you see the shutdowns are really affecting the
Well,
pricing and everything.
you need all that diesel to mine all that lithium for the batteries in the EVs.
Exactly. Yeah. And that's what I think. Is I don't think it's going anywhere. I just see efficiency kind of running its course more like, you know, every year they come out with the better engine and the better this and that. So I think that that's really where we're going to
Yeah.
see it. But yeah, again, I was riding high on the oil train because it, like in Alberta, when the Great Recession hit, we didn't really notice it. It was
Yeah.
when oil started to tank that it really suddenly stopped, and it was a little bit of a lag leader because you still need everything as it kind of goes through.
Awesome. Yeah, I do have a whole bunch of other sectors that I'd like
Yeah,
to just discuss. I don't know where you are on REITs. It's one of my more favorite sectors. I'd like to give a shout out to at the dividend guy who was my last guest because
yeah.
him and I disagree on RioCan, and I'm not sure if you are familiar with RioCan, but any thoughts on RioCan or any other REITs?
Well, actually, I saw that you're big on Ryokan, and I was actually kind of curious on that because as far as I can see, they're mainly like they're not residential; they're all commercial, right? And they
For the most
like
part, yeah,
I know them as I know them as owning a lot of malls,
yeah,
and while they're definitely doing good this year, I long term, I don't know. I mean, I used Apple Pay the other night with a store, and then all of a sudden on my phone, I just got a notification through it that said, "Hey, your shipment has it's shipped." Like I was like, this is better than Amazon. It didn't even. It just went up and I said, "Hey, we've got your credit card information, and now we're tying it to this, and you can follow everything right through the wallet." And I was like, "Wow, this is new stuff." So
yeah,
I would again, I'm really bearish on a lot of things right now. Just
right.
even so, um, but I'd be curious to hear where you think that they have the ability to kind of go.
So
If
I yeah, they are primarily like bricks and mortar retail, and I'm
Mhm.
probably a little bit biased. I grew up in Kingston, and one of the well, I don't know if it is one of the largest. It's a very large RioCan center in Kingston that has, a lot of retail stores, chain restaurants, movie theater. A Home Depot was one of the anchored stores. So I just
Okay.
see it as from my personal perspective of being at that location and going, "Oh, wow, look at this." It's like plus parking, it's, at least the size of 3 football fields, maybe 4, just like it's a kind of a massive complex.
Yeah.
So like I said, I'm probably a little bit biased. I also did mention when I was talking to the dividend guy the other day that I did get into them after the dividend cut, so that didn't like affect me the way it affected a lot of other people. So again, I'm in a better position. And also after the dividend cut, the price went down, so I got it in
Yeah.
at a lower dollar cost as well. So just kind of a lot of factors that, again, not trying to time the market, just a little bit
It
lucky with my
happenstance.
timing in the market. Sorry,
Yeah.
say that again.
It's happenstance. It's all of a sudden you
Yeah,
go, oh hey, like I've got this, and that's kind of where I try and go is I go, okay, I don't need to find the bottom. But after a big spike down, if I believe in the company, like it's just okay. So, I mean, I go back to like my dad when he was showing me on Stockhouse. I don't even know if it's still around, but they had the bull boards, and you can see it was basically Twitter before Twitter. You go on there and you'd get these guys just, oh, this is gonna rocket. They're doing this, and then you get the other guys who are like, no, you're all done. You're already washed out, and it was very interesting to kind of watch that and then see that progress and then kind of go, okay, I found my own bullboards in the Twitter spaces
yes,
and go from there. But yeah,
nice.
that's about it. I saw Chartwells. I've seen them expanding a little bit in the last bit too, but I don't have a lot of familiarity beyond that for
Yeah,
those two.
I've joked and continue to joke, although the joke is becoming less of a joke that I need to buy Chartwell before I actually need to move into one of those retirement homes.
Yeah, get the room paid for before you
Yeah,
get
right.
into it. Yeah. I know they've got some I remember when they came into the University of Calgary. That's where I got my education. It was a lot of people were upset that they managed to just come in full wholesale and just take over. So, and I mean, um, I think that they've got a good plan too. And then with the retirement homes,
Yeah.
as long as medical expenses don't go too far up, it should be an okay purchase, I think. But yeah,
Another
so
sector I like to talk about are the telecoms. Obviously, in
mhm.
Canada, we have the big three: Bell, TELUS, and Rogers. I guess you could probably, as a fourth, you could call Shaw Communications as sort of the fourth player in that space. Any
Yeah,
thought on in the telecoms sector?
um, I they've got an oligarchy. Sorry,
Yeah,
an oligarchy. Like they can do whatever they want. I mean, I really try and distance myself if that's it. I'm with like my cell phone's with Virgin, so I'm kind of not with the big three, but they're owned by Bell, and I use Bell and Telus towers.
right,
So like really, I'm just giving money to a different company who's buying it off of somebody else. So
right.
I think I can't see them going anywhere. I remember back in the mid teens, somebody tried from the States tried to come up here, and it was like they basically looked at our legislation and our bandwidth, and they went, "It's not even worth it to try and compete
Yeah.
with these guys." Like, I think that's very kind of an interesting tell on Canada, in that we have these larger companies that just kind of are able to almost bump up against them and monopoly laws, and like, I mean, Shaw was kind of on that recently. I don't know if their last purchase ended up going through.
No, it
Um,
was Rogers trying to
oh
buy
right,
Shaw.
yeah, and I think that it just tells you how little competition there is and how easy it is to kind of just take your market. But then yet these companies seem to, like, I'm always being sold something from them. It's so they're always
Yeah.
selling. So it's interesting to see both sides of it. Going, yeah, they're doing really good for the shares, but man, the customers suck. I hate being a customer for any of these people.
Yeah.
So
Well, and that's so many things in this investing space is like I hate being your customer because you like I pay through the nose, but I love when I turn that cash register around and you pay me, right?
yeah, yeah, like that, like Bell being able to just slowly get a position where you wouldn't have to pay for your phone bill or TV. That sounds really nice. But again, I'm going to reinvest that. I'm not going to turn that into cash at any point.
Yeah.
Try and live off of it. So that's kind of a good idea there. But
No, that's
yeah,
definitely one of the things I've tweeted out in the past too. Is like I want to own enough Bell to pay my cell phone bill. I want to own enough uh, Bank of Nova Scotia to pay my mortgage. I want to own enough Hydro One to pay my hydro bill. I want to own enough of any insurance company to pay my insurance. Like I want to own enough of an energy company to pay
yeah,
my heating and propane bill through the winter. Like if you could just accumulate all those stocks of the things that you have to pay anyway. I don't know. I
yeah.
just a thing I've thought of in the past, and I did tweet it out a month or maybe 2 months ago, just saying, "Hey, it it's not the worst idea in the world, in my opinion, right?"
Mhm. Well, I mean, I work for a publicly traded company, and we were private, and sold while I was and got sold into a public corporation. And it was a family run business previous to that. And I'd have people come in and they're like, "Oh, so how's the new ownership?" I said, "I'm great." And they're like, "What?" I'm like, "Yeah, I got it, but we're publicly traded, so I go to the meetings and I say that guy in Windsor needs a raise." And they say, "No, no, no, it'll drop the share price too much." And I go, "Oh, okay, yeah, it's fine." So I like that idea. I think it's a really good goal to kind of get there and go, "Hey, here's the services I use. If I can just have enough investment that they'll just simply chunk off a little bit for me, I would really appreciate that. I think it's a good way to go."
Yeah, nice,
Yeah,
nice. And I did briefly mention one of the banks there. Obviously, we're well versed in the big five Canadian banks, and I
yeah.
don't usually talk about news on this podcast, but there was some big news today with Royal Bank. Any thoughts on the Royal Bank acquisition of HSBC Canada?
Yeah, I kind of looked at that real quick. I thought it was. I mean, again, it goes back to the telecoms. They're just, hey, we're big. The thing that surprised me the most is they had enough capital sitting around to just make the purchase outright, um, which
It's
is
the
kind
Royal
of.
Bank. They have 13.5 million in their back pocket of
I
like the
know.
jeans they have over on the couch, right? Like,
Yeah, it's their second. their second purchase of a UK financial arm this year, which I found very interesting, especially when their I forget what they call their bond market had their little tussle up there. But it's interesting to me that suddenly the Canadian, like, and they said, I saw the article, they paid like, was it 13 or 30% more than they were hoping to pay for it, like, and that every Canadian bank looked at them. Like, that's it says something about the strength of the Canadian banks, but also just the like,
How ludicrous. Why would you pay that much more?
yeah, like where do you see that investment paying out? And like, are they like, I mean, in the States, there's just like, I think there's like 7,000 different banks, I think I read somewhere. And then up
Mhm.
here, we have, the big five, and then a couple of minor ones. I was with RBC. That's where I started my Action Direct. It was a really cool thing to get in and have my own, self thing. But I got sick and tired of paying them.
On
I'm now,
direct investing with RBC, the 9.95 commission, is that what
I,
you're referring to?
yeah, 9.95. But also, like, even when I had my banking, I had to have this, 3 products to get my banking for free. Like, I really focus on trying to limit my costs as best I can. So, and it seemed every time I'd go into them, like, I also have investments with, again, like, with Scotia McLeod. So a branch of the Scotia Bank. Like, there's not much options, so I kind of spread it out. And I feel like anytime I go into these places, they're like, here's this product you need to buy. Here, we'll get you set up with this and this. And it's like, I want to keep my money separate from my expenses so that I don't know. It's something I feel like I need to do to make sure that I don't dip into any sort of savings in my long term investments. Like, all my vesting, once that money kind of goes there, I don't ever want to see it back. I really focus on just trying to grow that nest egg, because I'm 36. I think that you're a little bit older than myself, but
I
I've got,
am.
yeah, just maybe 2 years or something like that, probably. But
2 years plus a few.
yeah, I'm really focusing on just growing that and trying not to dip into it. So I've actually we're stepping out of the banking system. I've gone to a local treasury branch, because, and I just find that my service is better, and I'm not funding it. It's really funny that I look at these big banks and I go, they're really good investments, and I can
Yeah,
see them going for a while. But like, I've pulled my mortgage from them, and I'm with just a little credit union, and I feel really happy about that every day, to just kind of go, and I'm kind of, again, sticking it to the big guys and as much as I can. But
I actually saw a
yeah,
tweet today where somebody was posting their BMO dividend of a couple bucks, and they were like, and it was so fun. It was exactly what we're talking about here. The tweet to the, I'll just
mhm,
summarize the tweet. It was basically, he said, as a small business owner, I hate the big five banks, but as an investor, I love them. Right? Like,
yeah. And actually, my next step, like when my daughter gets old enough to start working, I don't know if you saw, but Wealth Simple, they're kind of like the Robin Hood of the States.
yeah,
You
I
can,
use Wealth Simple.
yeah, they'll take direct deposit now. So there's no need for a bank to be involved in that. And then that way, like, again, it's going to kind of break my rule of trying to keep things separate. But then theoretically, your paycheck could go right into your investment account, and you can kind of divvy it out that way.
I didn't see
And
that
see,
yet.
yeah, they sent me an email just recently on it, and they said, "Hey,
They
we're just
probably
starting to
sent
roll
me
stuff."
one as well, but it's probably something I didn't bother reading.
Yeah, I get a lot of emails. So
Yeah.
I did social media, like, that's how I went social. I did social media for a dealership for a while, and I kind of grew that way. And yeah, I get anywhere from 100 to 200 emails a day through notifications and other systems. So yeah, easy to
It
see
can
stuff.
get
So
tiring, like, it's like so many that you just don't wanna read, and so
yeah,
many of them that are somewhat spammy, if not completely spam, right?
yeah, just pure junk. I've been using the unsubscribe button lately, and I don't
Yeah.
even notice it. It's not even making a dent. But yeah, so my hope is that my family is going to slowly get out of the big five, and we can just watch them and invest in them, and not have to necessarily worry too much about paying them their money, and let them get the others. But
And if the, dividend guy is still watching, we'll say the big six because he's big on National Bank.
A national bank, yeah. You know what? Being out from out west, I didn't even notice there was a national bank until I got out here, and I was like, "Is this kind of a regional?" No, no, they're pretty.
They're
They're
fairly big, but they're just not as
yeah,
big as the big five, right?
yeah. And I think that also like the other thing is that when I started in my banking, like I remember having to go to an ATM, and if I didn't go to an RBC one or BMO or wherever I was with, I got like $1.50. Like, how do they
Yeah.
make this money? $1.50 to pull, $40 out at a concert or something. Like, it was just insane. And
Well, still,
now,
like you try going to just one of those random ones at a convenience store or the gas station that isn't affiliated with your bank, whether it's RBC or CIBC or whoever.
yeah,
And yeah, I think they're $3 now that they hit you with, right? And you're like,
yeah,
oh
and some of it goes right into RBC. It's not all the. It's not like the guy who's owning the machines. Like, yeah, I'm getting 350 every time. No, it's part of that's going right to the bank, and
yeah,
it's just and you. I mean, and again, you wonder why there's such a good stock and been
because they
paying their
make
dividends.
$1.2 billion every quarter, not every year, every quarter.
Actually, I remember listening to your one interview when you were calling it was it the czars, a dividend czar. Did you get up to
Oh,
that?
yeah, that's what I did
What was
say,
that
but
term?
somebody came up with a better term, actually. They
Hmm.
called them a dividend centurion because they'd been paying dividends for nearly 200 years, right?
Oh yeah, like that. That's a like. uh, it's absolutely amazing to think about that. Like, and then I mean, when I got into investing, I didn't. No, no one was like, "Oh, here, if you buy this, they'll just slowly toss you a little bit of money every month." Like, I was, you go to the bank, you put your money in the bank account, you get interest, and then I watched interest rates go down to nothing, and I'm like,
Yeah.
"Great!" Like, it just didn't make sense. So then dividends, and yeah, that was a real big game changer
Well,
again
and
for
that's
me.
what I explained to people too. Like, you put $100, say I know there are a few out there, they're the higher yield ones, but just for example, you put $100, 10 shares into a $10 stock that pays 10 cents a share a month, right?
Yeah.
No bank is going to pay you a dollar a month on $100 anymore,
No,
right?
not even close.
That's just not that's just doesn't work anymore. So, and
Yeah,
obviously you can take that example and extrapolate it to a
yeah.
thousand different ways, but again, just for easy math, it's the simplest explanation for people when you're trying to say, "Hey, get your money into dividends and get it out of that savings account that literally is costing you money because you're going to have that monthly fee to have it sitting in a savings account or a checking account, right?"
Yeah. I was gonna say there was something else. Oh man, I lost it now. Sorry.
No
Um,
worries. No
but
worries. We can
yeah,
move on from banks if you
for
want.
sure. Yeah. Um, yeah. Yeah. What other sectors of it? Healthcare. I've
Another
got
sector I
on,
like
but
is consumer staples,
mhm.
food. I work in the food industry, and so I'm quite familiar with the movement of goods of food products. But
Yeah,
aside from that, whether you're in the food industry or not, it's a basic understanding that people eat every day. People use consumer staples every day. You have your Procter and Gamble items throughout your house, and so many other items like that throughout your house that you don't even realize. Um,
yeah.
Anything in consumer staples or food in general that you like,
Um,
or are you bearish on food too, just not eating through this bear market?
Actually, one of our COVID projects was to put a garden in, so we added 1,600 square feet, and
Awesome.
I don't know if you go through, but I planted some lettuce because I like Windsor. It's the banana belt. Like it
Yeah,
was like 10 degrees Celsius, so I have like 50 head of lettuce right now in my greenhouse, and like when I did it, it was just like here, this lettuce will be something that it would be good for me to eat. I don't have to go to the store. Like on my profile, I'm salad sovereign. I haven't bought lettuce since May for my
that's
household.
awesome.
Yeah, and then all of a sudden I was at the store and I'm like, I gotta put a lock in the greenhouse. Like
Yeah, right?
I got half a grand in lettuce in there. Like I couldn't believe it. So I'm starting to look at discount food. I don't I haven't looked at anything that's paying a dividend yet, but like the big guys like Walmart, and then
Costco is a
I
big one,
mean, yeah,
Pepsi, Coke.
Costco I think is gonna kind of come up, but I mean, like the PC, Umbrella, Sobeys. I think that they've kind of hit a little bit of a high as far as people and inconvenience, and they seem to be just they're the bad news story that I've seen a lot of. So but I'm really looking at discount consumer goods, and then also a little bit more into the sins, a little bit more. A little bit of alcohol and tobacco, not tobacco, but even the weed stocks a little bit,
Yep.
just to kind of see and kind of get a grasp of that. Because I mean, one of my colleagues said, yeah, when you're happy, you celebrate, and you got to have stuff there, and when you're sad, you got to have you got to consume something. So
Yeah.
it's kind of a little bit of a recession proof industry. So I'm just trying to find a couple of darlings in there, and I haven't quite figured that out yet. But that's really where I'm looking, is the discount. Like I kind of go, okay, I've got a set amount of money now, because the mortgage rates are going up. Like, start thinking about like the average consumer and go, okay, where do I start going? And I think the convenience is going to go out the window a little bit more as funds get lower.
Not investment related, but just
Yeah.
almost public service announcement. You should never drink to feel better. You should only
Yeah.
drink to feel even better.
Yeah, agreed. Yes. Yeah, it's a celebration or a disappointment to get your mind off of it and move forward. It's not yeah, definitely not get looking at any long-term habits or anything like that. But the odd beverage isn't I don't think it's going to hurt anyone if enjoyed responsibly. But yeah.
Yes, obviously the meaning of that saying, you should never drink to feel better. It's like if you're down and depressed, alcohol is just going to make you feel worse. But if
Yeah.
you already feel great, like you just won a championship, you're going to drink to feel even better, right?
But
So that's the two ends of that spectrum. And alcohol is exactly like that. It's a mood enhancer. So if you're already down, alcohol's not going to
it'll,
help. But if you're
it'll
already
enhance.
up, alcohol is going to help, right?
Yeah, there's a reason why they get the champagne out
Yeah,
when they win the big stuff. But yeah, so that's kind of where I'm looking right now, is just looking at some discount grocers and seeing where some of the long term. I mean, even I'd be interested to see where Canadian Tire ends up on that, because I kind of think of them as kind of a lower end. Oh, hey, I can't go buy it on Amazon, but I might be able to go get a good deal on something that's from Canadian Tire, and use a couple of Canadian Tire bucks that I've got kicking around.
right. And like, yeah, I think Canadian Tire is a great retail store,
Mhm.
as
But
most Canadians do. We're
yeah,
probably all a little bit addicted to it, right?
yeah. It's funny how you see them pop up in the little towns. I've done a lot of travel across Canada, and it's
Yeah.
them there's an A&W. I think that A&W is the biggest. I don't know if they've got, but I think they've got more franchises than any other company in Canada. I remember seeing that a couple of years ago. So that's
It would make sense. They have a lot of locations in malls now,
mhm. Well,
and I remember, if you
mhm.
as a kid, I am old enough to remember when they used to come out on roller skates and put the tray in your window. So,
Yeah, I'm not quite
yeah, so if
remembering that, but
a few more than 2 years older than what did you say, 36?
yeah. Yeah, but yeah, so that's kind of what I've been looking at lately, as far as the food, because I think that again, like you said, people have got to eat, and I don't think that a lot of people have gone to the lengths that I've gone to try and help yourself out with that.
Right. And no, more people should, because
Hmm.
obviously that's great. Like,
Yeah,
even you're reducing your carbon footprint because you're not getting that head of lettuce on a truck from California. It's coming, you're walking 20 feet out into your backyard and grabbing it, right? So,
yeah, and actually we've gone. We've doubled our indoor grow space. We're going to 600 square feet this fall. We just made that purchase on Black Friday. So
wow.
that's the excitement for us. So we'll see where
That's
that ends
great.
up. Yeah.
That's great.
So
Yeah. Yeah, I like over my years I've grown a lot of things in gardens too, and I just moved into this house just over a year ago, and I didn't get to that stage yet, but hopefully next summer I'll be growing a small little garden as well, because every things you grow yourself taste better, for one, because there's little bit of pride as well of like, hey, I grew that.
yeah.
And yeah, you're saving my, especially you see the prices at the grocery store, like you said, you have $500 worth of lettuce sitting in your backyard, right? Like,
Yeah, that's a weird. It's such a weird sentence, and it wasn't started off that way. But yeah,
yeah.
so I guess that's one of the investments I've made myself that's really paid off lately. Uh,
Awesome. No,
so
that's great. That is absolutely fantastic.
yeah,
Okay, I know that you want to. I know that you're into cryptocurrency and Bitcoin, and I know you want to ask me a little bit about crypto. Some of you
Yeah,
may know that I've dabbled, maybe more than dabbled in some crypto as well. So, yeah, let's spend a few minutes at the end of this episode talking about some cryptos.
for sure. Yeah, I'm pretty much Bitcoin only at this point. I came in. I kind of like I said, I got started back into really getting heavy into my investing when the meme stocks came in, and I started looking at it, and then this Bitcoin thing started ripping, and I kind of got a little interested in that, and um, I can I can fully say that I am not anywhere close to a positive
I don't think.
position at this point, but that's part of that 5% risk portfolio that I go, if it's gone, it's gone, and I understand that, and if it doesn't, it's just that's the level of risk. So when I came in, I really went into a lot of different markets. I was a market make. I found a lot of intrigue actually in arbitraging the different markets and being able to pick up from it's looking back, I can't believe how risky I was looking at stuff, but going from exchange to exchange and trying to you know
Oh yeah, because you see,
like
like I think didn't BlockFi just file for bankruptcy as well?
yeah,
And
well,
obviously
because
that whole gong show with
FTX and
FTX last week or the week before,
yeah
and then Celsius prior to that. Like,
Yeah,
oh,
I
what's going
managed
on
to
here?
I managed to miss Celsius by 2 weeks, thanks to Corey Clipson. I follow him, so shout out to him. But
Awesome.
yeah, that was and again, that's simply my mentality of going. I have this asset. I'd like it to do something for me, and to get paid back in it, you can kind of get an interest. And again, the risk is really high. So I was
Yeah.
looking at a lot at arbitrage. I looked at a couple of altcoins. Um, I ended up settling on one literally DFI coin, and it was very interesting. Ecosystem. They have an oracle from the what is it? I think they have an oracle from the Dow Jones and the New York Stock Exchange that updates their pricing. So they have a full embedded liquidity market. I can get really technical on it, but basically they're trying to create a digital representation of the stock market so that you can trade 24/7. Um, and I mean, I remember at one point I saw you kind of look at it and you go, well, it was the day I think Google I think had an announcement or something like that, and I was able to look at it and go, the Oracle's saying this price, but the pool hasn't quite caught up with it, and I had a nice little jump in and out that did all right for me. But again, yeah, I've after the Celsius blow up and everything kind of going on, I've really pulled back. I've self custodied everything, and I just kind of
Yeah.
sit on it now. But it's definitely an interesting thing. I really got into a lot of understanding of it. Liquidity pools are really a cool thing if you can find the right asset. But um, I don't see a lot of value in a lot of these things that are out there right now, and it's tough to see because everyone's trying. I feel like everyone has their favorite. I got a guy at work who's like, oh, I've got Ohm or something like that, and they've got a real niche and they've got all of this use cases, and I'm kind of going, man, I hope you know what you're doing. And he goes, yeah, nope,
Yeah.
this is fully, it's gone money. And as long as you have that understanding, I'm not about to pass judgment on you whether or not you're investing in the right thing. Because I really hope that you don't sit back and go, oh, hey, that Dan guy's got that Bitcoin. Don't you shouldn't talk to him about anything. But yeah, that's I found that in 2014. And the only reason why I didn't invest in it is I didn't see a demand side at the time. And because I understood the supply and demand economics of it. I've got a minor in economics and philosophy out of everything with the. So I did, that was the only part I didn't understand until this year was the demand side of
Right.
Bitcoin. So that's where I sit now. Um, I know that you've mentioned you might have some XRP that hanging around.
I do.
Um, I'm kind of curious how you feel all the SEC investigations have gone for you on that, or if you've been following it at all. Uh,
Yeah, so I
it's
haven't been following it nearly as much as I did, like this time a year ago and early into 2022.
yeah,
It kind of got to the point where it's like, listen, at some point this is going to end, and wake me up when it does end because like, and I'll just hold the bag. You did mention use case, as you probably know, XRP does have um, some great use case potential, use
Mhm.
case scenarios, use case theories. Um, as going back to Bitcoin, you
Yeah,
mentioned uh, that you were down on it now, and the entire crypto universe, the entire crypto ecosystem follows
mhm,
Bitcoin,
yeah,
and I'm sure you're well aware of the Bitcoin halving that in the past since Bitcoin's inception, it's been every roughly
4 years.
4 years,
Yeah,
but it's more to do with actually filling the blockchains when the halving happens. So the next halving is scheduled probably around 2024. And I'm
yeah,
guessing that the run up to that halving, there's going to be another huge run up in crypto. By 2024, there's going to be probably more adoption of crypto, and then and the rest of the crypto universe, the crypto ecosystem will follow along with Bitcoin running up to that and after, because we saw the same thing in sort of 2020, 2021, this run up to the halving and this huge explosion after the halving. There was obviously a lot of popularity in
yeah.
2021. That probably had a lot to do with the pandemic, people sitting at home on their computers just typing things
Some
into Google, right?
Yeah,
And who knows what
some
they're going to
extra
find.
liquidity in everyone's pockets, that probably helped a little bit too, but,
Yeah, exactly, right? So I definitely still see the potential for crypto in the future. And I guess we're also gonna see where that goes with governments introducing, CBDCs. I think I got those letters in
yeah,
the correct order.
yes, central bank,
Digital currency.
digital currencies. Um, they'll happen eventually, but, um, if you start talking to Bitcoiners, they're very much against it for the most part.
Yeah,
It's and I think that one of the funniest things that I've kind of seen on it, and the best comment is that a lot of brand new government programs do not run the way they're supposed to. That doesn't mean that it doesn't get fixed and kind of moved, but it governments are cumbersome. They can't. Everything has to be set up and contracted out and done. So I think that that will have an effect, but I see it going slow. One thing I will say is if you want to have I find that Bitcoin, especially from a stock perspective, it's such a liquid asset that it can be a very good market predictor. Like I watch it Sunday nights, and I mean, anecdotally, I feel like it tells me what Monday morning in the stock market's going to be like before it happens, which is
interesting.
kind of an interesting thing to see. But I mean, maybe that's why I kind of have a larger cash position right now is because I still think we're not near the bottom of where we're going to hit with
Right.
more bad news coming. So to kind of see it kind of tick up and down and kind of follow that, it's interesting to just watch it. That it seems almost like at times it trades like a tech stock, but then it
Yes.
also has this underside that it may be manipulation or whatever you want to call it, or depending on where you come from, or the ability to um, get lots of leverage at the right or wrong time, can really hurt or help the price very soon. And you can see these weird blips that are just very interesting to me to kind of watch and try and see the volume going. But if you watch it for any length of time, you can see it's a very controlled. All the market makers are in there, and it only moves right now when they want it to.
When the
Uh,
whales decide for it to
yeah,
move.
yeah, and it's a very abrupt, and then you see the capitulation after the fact, either which way. So, yeah,
And
definitely
that's
risky stuff.
is
But
that and I think this is, but I'll ask it in the form of a question. Is
mhm,
that why we're right more or less midway between the halving, and
mhm,
so you're seeing it just being controlled by the whales and the by market manipulation, whereas when
yeah,
I see the halving happening, that's going to reduce supply by a half,
mhm,
literally a half. It's called a
yeah,
halving for a reason. And then with probably more adoption or even the equal number of adoption and demand, so you have supply decreasing, demand increasing, or staying the same,
Yeah.
price should go up, right? Like that's economics.
Exactly. Yeah. And the difference is that like in oil and gas, when oil's like I go back to kind of what I know. When oil was $100 US and we were at 50 cents to the Canadian on the dollar, it made so much sense to go and pull oil. Like you could go pull oil out of the ground, and like I was in a junior oil company, and they were pulling 3,000 barrels of oil at a day, and it was just it was just money coming out,
A
and it was
license to
coming out.
print money at
But
that point.
exactly, and then more the shale. Then they started drilling for shale in the states. So there's all of a sudden there was, because the price was so high, all the supply. People go, oh, I can supply natural gas at that price. I can go make these riskier investments. Like that's how the oil sands kind of stays afloat up in Alberta. Is that it goes, okay,
Right.
here's our dollar cost, and when it's above that, we can produce as much as we want. But when it's below it, it doesn't make any sense. Whereas with Bitcoin, um, once the halving, it's a set amount, and whether the price is up or down, you can't go, oh, hey, let's go just mine a little bit extra, and we'll pull it. The supply is set, and it's slowly decreasing as it's being
Right.
doled out. So I think that was the side that I understood 100%. But it just markets are two ways. If there's no demand for it, and that's really what I've discovered in the last bit, is that there is demand, and it's growing. And I don't see it going away, which is the interesting part, regardless of
Yeah.
the price. Um, I still
And
have a
that's
couple of people.
where, back to my point
Mhm,
of the entire crypto universe follows Bitcoin. So, you know, yeah, sure, I hold some XRP. I have a couple other altcoins as well.
mhm,
And I see them just kind of coming along for the ride. And I don't even say I have Bitcoin. I say I have some Satoshis because it's that small of an amount.
yeah, yeah. I'm working trying to get a Citadel. I don't know how far into Bitcoin lore you've gone, but I'm trying to build up my little stack, and it's yeah. Um, it's a little stack. It's not. I'm
Yeah.
not. You look at the whale and fish and all this thing, and I'm like, I'm a piece of krill, if anything, that
Yeah,
the
I'm
whales
just
are just
plankton.
eating.
I'm just
Yeah,
plankton, I
exactly.
guess.
So it's but again, it's something I can access it, and um, you like I was trying to talk to a guy at work, and he's like, well, I don't have at the time it was like 40 grand. I don't have 40 grand. I'm like,
You
you could
don't yeah,
literally
you can
invest a
literally
dollar.
buy $20 worth of Bitcoin
Yeah,
or
it's and that was like, what? No, that doesn't make any sense. And so it was kind of interesting to see that, and just see, yeah. If you follow me at all, you'll see I am a very firm believer of 21 quintillion, which is the exact amount of satoshis that'll ever be made.
yeah,
Bitcoin's not a real thing. It's a contrived thing that's helped people with their rounding to get rid of a couple zeros off the end. But yeah, so as long as I still see the demand, I feel it's going to come. And again, it's just a part of my portfolio that I find a lot of interest in, and it's kind of where I find I spend too much time on something that should be really simple and easy. And that's the other thing, is that they're like, oh, what can you do with it? You can't. It doesn't do this. It doesn't do this. It sits there, and it's like, yeah, it is. It's really boring, but I don't know. The overall economics of it really makes sense to me. So that's where
nice.
I'm at with it.
Okay,
Oh,
you can find Dan on Twitter at Wedge
yeah.
Social. And thank you so much, Dan,
Oh man.
for spending some time with me here on the Passive Income Podcast. It's truly appreciated. And I
Yeah.
don't know, I didn't see any blog or anything else that you had on here for any links that I was going to pull up, but yeah,
No, this is pretty much me. I actually had one last question for you, Dave, and it's something that
sure.
I heard about 6 months ago, and it was, why would I? It was a question, and I think I've got my answer. So if you need a minute for it, but why would you invest in a company that's taking its capital, and instead of investing it in itself and growing itself, it's paying a dividend?
Yeah,
Uh,
great question.
mhm,
Great question because actually I have a coworker. Actually, he's the boss's son. He's the future owner of the company,
yeah,
and he's kind of made that same statement to me. He's like, I hate companies that pay dividends. It means they're not reinvesting into their company. But guess what? He loves his iPhone,
yeah,
right?
yeah,
So right there, Apple pays a dividend. Do you not
yeah,
think Apple reinvests into that company like Steve Jobs is still running the show, right? Like
yeah.
I don't. Does that answer your question? Kind of,
Yeah,
sort of, a little
a
bit.
little bit. My answer is that I see it as a way to defer tax, so that any dividends paid, the company doesn't have to, like, especially up in Canada, it passes the tax burden on to the individual. But I mean, I think me and you are the examples of why a dividend's important, because my money wouldn't be there otherwise. I would, like, if company A and company B, everything being equal, I'm going to invest in, I'm going to bring my capital into the company that's giving me a monthly contribution back.
Yeah.
And I think
Or
that
quarterly. Like, I don't like.
yeah,
I love
whenever it
monthly
happens.
dividends because that means I can give myself a raise every single month. But
Mhm.
I'm not against quarterly dividends either, right?
Yeah, but it's something that I wouldn't, like. So for me, if I think that I would appreciate that, I would assume other people would. So that wouldn't that just bring more capital X in? Like, wouldn't that bring more investment and be better overall for the stock and my stock price and all of the metrics I have as stock? So I think that was my answer to that question,
That's a
is
good
that,
answer as well. Yeah.
yeah, is that, yeah, it's not, it's just one of the many tools in the toolkit of growing a company and making it profitable.
Yeah, I just really like using it. Like, obviously, Apple has a very low yield, so
Mhm.
it's a very low paying dividend stock. But at the end of the day, I think that is a prime example of a company that pays a dividend that is reinvesting back into themselves. And on that note, I always love my Samsung more than any, and Android more than any iPhone I have ever had.
I am a When BlackBerry was at its top, I got my first smart BlackBerry, and I was so and my wife's like, "Oh, you'll be able to do BlackBerry Messenger," and then she got an iPhone 6 months later, and I said, "Okay, I said we can't jump," and so we made the choice. I am part of this cult that of mediocre products that always work, that are twice as expensive, but again, like,
And
like,
you have to line up around the block at midnight
oh,
to get one.
yeah, but yet they all talk to each other. It's all seamless, and so
Yeah,
I'm I can't imagine ever leaving. Like, and that's
yeah.
where they are. So yeah, but yeah, that's kind of my answer to why would you invest in a dividend company and why
Yeah,
it's
no, I
better.
like it. Good answer, good answer.
So, yeah, and I like yours too. It was good that yeah, there's a lot of different products out there.
Okay,
Yeah,
thanks again so much for spending time with me on this episode of the Passive Income Podcast.
yeah.
If you're
Thanks,
still
Dave.
watching at this point, over an hour later, you have to find that black subscribe button down there and click it.
Give it a shot. I'm a subscriber. I like it.